But for this morning, let's speak to Mr. Bismarck Rwani and see how this affects us or may affect us back here in the emerging economies, especially here in Africa. Mr. Rwani, good morning and welcome to the program.
Good morning, Nini, and thank you for having me this morning.
So I guess it was predictable that the key rates will be held for the fourth consecutive time to the displeasure of President Donald Trump. But I mean, how does this go down, the consequences to us here in Nigeria and Africa as a whole?
No, actually, it was expected. As a matter of fact, the more the pressure that Trump put on power, the more likely that there will be no cut and the health steady. But what was more important than anything else is the fact that the Federal Reserve is now predicting that there will be a slowdown in a growth rate in the United States later this quarter. So one, there will be a slowdown in growth. Two, they're maintaining interest rates. And three, the question of having two cuts this year is now becoming more unlikely. So we might have one cut this year, and that's good enough. But I think we have to go back to the meeting of this morning at the Bank of England, where rates are expected to be held at 4.25% per annum. But really, what has happened is that there's a disconnection between the global shocks and the threats of Iran and Israel and all of that, and the global financial markets. So really speaking, we should expect those rates to be held where we expected it to go down. And therefore, for Nigeria in particular, who is going to approach the international credit markets this year to raise some additional money, it means that rates are not going to be as low as we expected. Therefore, external debt service burden on Nigeria is going to be much higher than was earlier anticipated. Having said that, the fact that certain parameters, the Nigerian economic parameters, are more stable than they were earlier in the year, means that it may not be so much of a threat. That notwithstanding, at $77 a barrel, this is higher than our benchmark price. This is far higher than we're expecting. That we're obviously it's not that the price of oil will drop to about $60 a barrel, but holding at 77 at this time, it means something. There is a decoupling between what the oil markets are saying and what the tension in the Middle East is actually reflecting.
Yeah. So we see, of course, on the one hand, the price of oil surging, and we've talked about the pros and cons of that. Now, you also brought in the issue of the borrowing. And it does seem like the government is being intentional about that borrowing. So we saw that they launched the green bond. That, of course, is another borrowing. But since that's domestic, it might be cheaper for the government. Do we see the government maybe cutting down on those foreign borrowing that might bring in the element of dollar?
Not at all. I think we shouldn't confuse international borrowing from domestic borrowing. The Sukuk bonds and all those things are domestic borrowing. We have not maxed out on our borrowing requirements, but the most important thing for as far as we are concerned is that what are you borrowing to do? One, we are increasing our revenues because the tax act is going to be signed by the president, according to Wale Edun, in the next 2 weeks. If that is done, we will see a growth, an increase in our revenue. But the important thing here is that Nigeria needs some dollars. And those dollars are either going to come from investments that are coming in voluntarily or from borrowings that are done strategically. So I'm saying that if we were anticipating to borrow because we thought interest rates are going to come down, therefore the debt burden, service burden will not be as hard as it was originally expected. Now, the drop in interest rates is going to be delayed a little bit longer towards the end of the year or early next year, which means that Nigeria will have to raise money at a higher rate than was originally anticipated. And if that being the case, we now have to be more efficient in the way we use our money. What are we borrowing for? What are the projects? Are those projects going to generate enough revenue to amortize and service that debt? Those are the key elements. And it is important because we have done about 740 days since the administration came into power. And the time is running out, so we need to be very, very intentional, very strategic, and focused on what we are borrowing for, so that the impact, one, to generate revenue, two, to have an impact on the welfare of the people, so that the people can see the impact, begin to reap the dividends of reform and policies and democracy.
Mm. So, Mr. Ruwan, it does seem when it comes to borrowing, um, perhaps I might be wrong, the government is doing more or maybe talking more about the domestic borrowing, especially like the Sukuk and the Green Bond, which are tied to projects. And it seems that is helping them to win the mind of more Nigerians, when it comes to the issue of debts and what the funds are being used for.
Yeah, you see, the reality is that let's not be allergic to borrowing. What we should be allergic to is we should be allergic towards leakages and what in other words, the monies that are being corruption and lack of transparency. If you borrow and say you borrow to build a refinery, and the refinery is producing, and because of the production and consistency in the refining, you are getting steady supply, productivity increases. The economy as a whole is benefiting. It is not. It is, in fact, it is uneconomic and and it is not professional for a company or a country not to borrow at all, because your credit worthiness is high, you'll be borrowing at rates much lower than the rate of inflation, and that's what's happening. So what we should be looking out for in the next quarter is if the Central Bank of Nigeria, because inflation is beginning to moderate and it has come down to 2 months consistently now, consecutively. If the rates are coming down, then the rates at which the federal government of Nigeria is going to be borrowing, and the state governments for that matter, is going to be lower. And in that case, what are they going to use the money for? To pay off debts so that the contractors can then mobilize and get workers to the field. And that will actually increase productivity and output. And that is the key. Inflation has two variables that drive it. One is low output because of constraints, and two, excess liquidity. So the central bank is going to be making sure that liquidity is constrained, and on the other hand, the infrastructure bit is ensuring that productivity and output is increasing. Then you will have some moderation in inflation and an increase in growth. That is what Nigeria should be looking at. But then, even when you are completely good, the question is, does it go round? Is it increasing income inequality between the haves and the have-nots, which is a major problem that we are facing? And I think all hands are on deck. All hands should be on deck to ensure that the income inequality and opportunity inequality is narrowed, so everybody gets to enjoy the benefits. I want to use that word again, over-labored word, the dividends of reform.
Mm. So, putting all of these factors together, what way or what decision do you think our MPC could take when they meet next month?
Okay, let me say one. We think, and we saw inflation decline in April, decline in May. We think that in June we may not be so lucky. Why do we say that? Because the Mokwa flood effect, one. Two, there has been the rains and the planting season. We've seen that the exchange rate has stabilized. As a matter of fact, appreciated in the power market, the Naira is trading below 1,600. But the lag between when the things that are moderating inflation begin to kick in and when we feel the effect, and the other things that have increased the price level, one, diesel price is above 1,000 again. We see some of the commodities, and when you go to the commodities, you see that they had all increased, but they are now flatlining. They're not going higher because we've seen that consumers are beginning to resist and begin to not buy anymore. But if you take the commodities in particular, say rice is now 82,000. It used to be as high as 105 last year. At 82,000, that's kind of stable. Tomatoes are up at 90,000, and that's flat, and that is much higher than it used to be. Pepper is at 185,000 naira, which is significant, and even onions is way up at 130,000. Palm oil is at 12,000. So, yes, the prices are flatlining towards the end of June, but compared to May, those prices are much higher, and therefore, if that is the case, the question before the central bank and the MPC is that one, we saw inflation decline in April, we saw inflation decline in May. Now we've seen a marginal increase in prices. Should we wait and see and hold maintain status quo, or should we be aggressive and bring interest rates down? Which means that we might begin to see pressure. But as a betting man, I would say there's a 60% possibility or probability that the central bank will hold, and there's a 40% probability that the central bank will reduce interest rates by a maximum of 25 basis points, just to show that we want to get growth going again. But the big question is that between now and July 20th, if the GDP numbers come out for Q1 and they are stronger than expected, then one would say that the MPC is likely to bring down interest rates. But don't get excited, don't get carried away. Even if they're going to bring down interest rates, it will not be more than 25 basis points, which is a cautious way of doing things. Central banks are supposed to be very cautious and intentional the way they go doing things. You can see what has happened at the Federal Reserve yesterday. You can see what's going to happen at the Bank of England today. There's no difference. Nigeria's central bank is not going to do anything different and behave anyway. Will not be an outlier. They'll be doing things very rationally, very cautiously, and extremely, taking all factors into consideration. So that's what I expect.
Yeah, cautious. But Mr. Rwani, the killings that we've had, mostly in areas that are supposed to be the source of food or food items at least, are those factors that may also feed into this decision or the numbers that we could see, both for inflation and for the GDP?
No, but you see, we talked about food inflation, right? The GDP is for Q1. That is because Q2 is ending at the end of this month. So what we are saying is that if GDP in Q1, which normally is always a slow quarter, if the GDP is at 3.46, which is what the consensus opinion is, that means that it's going to be higher than the traditional level, which last year was much lower than that. So the base effect is there. The fact that productivity is beginning to increase compared to the trend, even though not as high as we want it to be, means that the central bank could be encouraged to bring down interest rates a little bit so that it can spur growth, while the mandate of the central bank is not growth driving, but it's also about price stability. The central bank will focus more on inflation, but at the same time will give an impetus to the fiscal authorities to say, okay, we have brought down interest rates to encourage people to invest. But then the fiscal authorities have to do a lot of things about the bottlenecks on productivity, the roads, the concessioning of the roads, which has been delayed for some time. We have to address that so that contractors can get to the site and begin to employ people and begin to produce and begin to reduce the constraints for logistics. I think those are the key things. So let's separate the issues. Central bank will focus on monetary policy, monetary stability, and also to bring prices down, while the fiscal authorities will focus on how to get output higher and how to reduce the cost of logistics and cost of production. Please bear in mind the fact that we saw in the last inflation report, we saw inflation in Borno State, food inflation in Borno State higher than 36%, while in Katsina State, on the other, we saw food inflation at about 6%. The difference between what's happening in Northeast and Northwest is night and day, and that is not natural. So the question we're going to ask is, how much of this inflation is structural, which means that it is much more fundamental, and how much of it is transient because of events that are happening, like the crisis in Benue State, the floods in Mokwa, and also the insecurity. We have seen that there's a strong correlation between insecurity and food inflation, and strong correlation between food inflation and cost of living crisis. So all of these things have to be looked at holistically rather than individually.
All right, I'm talking about food inflation. Mr. Rwani is still planting season, I guess. So commodities, domestic commodities now, I guess they're still on the climbing side.
Yes, no, we've seen domestic commodity prices. They increased last month, one, because of the price of diesel, two, because the exchange rate actually depreciated a little bit last month, but it's now appreciating again. we also saw that the some of the insecurity has led to that. Now, if the battle against insecurity is more than just sound bites, because what has happened in the last 6 months has been more sound bites. Every day we talk about arresting herdsmen or whoever the culprits are, but nothing happens. So now people have factored in this uncertainty and this insecurity into the pricing of goods, and it's going to have a negative impact on inflation. So let us assume that now the security forces are going to be serious about dealing with insecurity. Once you deal with that, once you can actually begin to contain and curtail insecurity, and at the same time allow the roads for goods to move from one part of the country to the other, you will see that food inflation begins to decline. If you can get that done, then all other things begin to happen. But it's what talk is cheap. I can say what I like here, but when it comes to taking care and actually solving the insecurity problem, it's much more structural and fundamental than we think. But there's a lot of work to be done. So luckily, with the tax incentives coming up, and companies beginning to invest more because there's some stability in the exchange rate, we might begin to see increase in output, irrespective of what the security situation says.
All right, Mr. Rwani, thank you so much for taking us through all of that, the inflation and what to expect from the MP.
Thank you for having me. Thank you for having me.
You're welcome.